What's up, everyone? It's Caddy with MoneyVest. So we've got another really interesting week on our hands. It is going to be a shorter week because Monday the markets are closed in observance of Martin Luther King Day. So it's going to be another 4-day week here, and I'm going to go over exactly what to look forward to when it comes to earnings and the economic calendar, because the earnings season is now getting started in full swing with banks reporting their earnings on Friday. And of course, we've got lots of companies scheduled to report in the next 4 to 6 weeks. So we got to get ready. And the Federal Reserve's meeting is also going to be towards the end of Jan. So January 30th and 31st, it's a 2-day FOMC meeting. And that is when the next Jerome Powell's speech is. So hope you all enjoy this video and find it helpful. If you do, make sure that you drop a like. That's all I'm asking in return, is that you subscribe to the channel. And of course, join our Discord and our Patreon if you want to. Link's going to be down below. There is a 16% annual discount that's available. I've opened up a couple more spots if you're interested in joining, and of course, getting access to all the members-only private videos and trade alerts and trade ideas, buy and sell alerts, options alerts. Everything's going to be included with the link down below. I'd love to have you on board. So this right here is the earnings calendar. We've got lots of companies reporting next week. So Goldman Sachs is going to be reporting on Tuesday before the bell, along with Morgan Stanley. We've got PNC also reporting, and First Bank's going to be reporting on Tuesday before the bell. Interactive Brokers after the bell, and that is pretty much going to be it. 4 or 5 companies on Tuesday. Monday, of course, there's nothing there because of Martin Luther King Day. Wednesday, we continue on banking earnings with Charles Schwab, U.S. Bancorp, and Citizens Financial Group. Discover's reporting after the bell, and that is pretty much going to be it. And then, of course, Thursday is when there's going to be some interesting companies like TSMC is reporting before the market opens, JB Hunt, and KeyBank, of course, M&T Bank. We continue on the financials and banking sector, and then finally finish it off with Ally Bank. Travelers is reporting, State Street's going to be reporting, and Fifth Third Bank also reporting on Friday before the market opens as well. So again, it's going to be kind of packed with banks and financial stocks. XLF has been doing really well. So if you come over to XLF, which is the select sector S&P 500 financial stocks, you'll notice that it has rallied quite a bit from October lows. It's jumped over 21%, and the next resistance and target is going to be up to $40 a share. But of course, it's incredibly overbought right now, even on a weekly time frame. Kind of bounced perfectly off of that 200 simple moving average, broke out of that resistance, and new support is going to stay at $36.50 for XLF, and the next target is going to be up to $40. But like I said, the resistance is going to be that level, but RSI MACD very, very overbought at the moment. So we'll kind of take a look at how these companies report going into next week and what the momentum looks like for financial stocks. Now, this right here is going to be, let's just quickly go over the economics calendar as well. So again, Monday is going to be a holiday. Fed Waller's speaking on Tuesday. So Monday, Tuesday, it's going to be a pretty slow start to the week. But then, of course, we've got retail sales coming out, core retail sales and retail sales. We've got several FOMC members talking, and very important 20-year bond auction taking place at 1 p.m. on Wednesday. That's going to be January 17th. And then, of course, we got the Beige Book. We've got the Atlanta Fed GDP numbers at 2.2%. That's the forecast. That's going to be the consensus going into next week. And we've got some API weekly crude oil inventories as well. FOMC member Bostic is talking on Thursday, January 18th. We've got, of course, initial jobless claims. We've got the Fed's balance sheet, the 10-year TIPS auction, and a few more FOMC members talking. And then on Friday, we've got inflation expectations and consumer expectations. Consumer sentiment, Michigan survey also coming out. It's consumer sentiment and 69.3, a little bit lower than what the previous number was at 69.7. But this has dramatically improved to the upside, considering how well inflation has been trending lower. And of course, there's a significant optimism around rate cuts. Now the market's pricing in 7 rate cuts are being priced in for 2024. At the moment. So that is, again, a very, very optimistic number. So it's going to be a little bit of a slow start to the week because of the holiday, because of not a lot of earnings being reported, but it is going to pick up. So it is very, very important to stay on top of not only the earnings calendar, but a lot of economic stuff. Inflation is behind us. Unemployment is behind us. But we do still have the GDP numbers. We do still have a lot of bond auctions, members talking, consumer sentiment, expectations, not to mention initial jobless claims, the Beige Book, and the more important FOMC meeting coming up towards the end of this month as well. Now, how are the markets kind of shaping up here? So if you come over to S&P 500, very, very nice, consistent move up. This past week, the markets were up 1.84%. Closing in at yet another 52-week high. And we are within striking distance, folks, from its all-time highs. So 48.16 is what the S&P needs to break out of in order to finally, after over 2 years, of breaking out of this resistance. So December 2021, so entire 2022 and most of 2023, the markets sold off and then recovered. And now 2024, it looks like we're finally going to be breaking out to a new all-time high. I have no doubt the markets can achieve that. It's only less than 1% away. But what happens after is, again, going to be the real question, with the RSI and MACD also moving up. Significant concentration in Magnificent Seven companies. And again, big tech is the core of the entire sort of market's weighting. And not to mention that the valuations are also getting a little bit more on the expensive side. And market's optimism around 7 rate cuts is really, really high. So expectations are high. If the Federal Reserve underdelivers, that obviously creates a little bit of that disappointment, which could lead for the markets to start rolling right back down, considering how low the volatility also is, trading inside this red rectangle between 11 and 12. But that's going to be for a different video. Basically going over the resistance at 4,800. Support level is going to stay put at 4633 going into next week. A very, very strong week from the previous week here for the S&P and NASDAQ here. Also having a very nice week, up over 3%, bouncing right back up from that support of 14,300. Lots of buyers stepping right back in. And resistance is going to stay put at 15,300. So that is going to be that level to keep in mind for the NASDAQ, all the way up to as much as 16,200. So those right there are going to be a couple of resistance and targets to watch for the NASDAQ. It is a little bit away from its all-time highs. Unlike the S&P 500, the NASDAQ is a little bit over 8.5% away from the all-time highs, which is kind of interesting because technology is the one that's actually led to this entire move higher. And yet the NASDAQ is still nowhere near close to its all-time highs, and S&P has actually made a very strong recovery back to its all-time highs, and the Dow Jones already hitting a new all-time high and well over 38,000. So 2021 highs, we're back at 37, just under 37,000. We've already crossed over 37,800. So it's seen a very nice momentum higher. But again, very overbought on the RSI and the MACD as well. IWM, on the other hand, so Russell 2000, I feel like 2024 is going to be the year for small caps as well. Because of so much consolidation, because of interest rates now expected to come down, there is possibility for the small caps, mid cap sector to also start picking right back up. And my target and resistance for IWM is 236. That's going to be in line with its all-time high and the previous resistance that we have already identified for Russell 2000. And a much stronger support, basically a buying opportunity at 162. So inside this green rectangle, very strong area of support for Russell 2000. So hope you all enjoyed this video and found it helpful. Make sure that you drop a like and don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us. Bottom line is that we've got earnings season just getting started. Lots of economic indicators and reports being reported, not to mention the FOMC meeting that's going to take place at the end of this month. And finally, the S&P, NASDAQ, and the Dow, very close to its all-time highs. NASDAQ still has a little bit of ways to go, but bottom line is markets are trending upwards, moving in the right direction. Volatility continues to stay low, and that's exactly why I'm going to be cautiously optimistic in this market right now, selling calls, not really being aggressive in dollar cost averaging, but still buying broad-based indexes and ETFs, and at the same time, just being cautious here, considering how much we have moved up, how overbought we are, how expensive the valuations are, and how concentrated this rally is on the back of big tech. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like. Let me know in the comment section down below, what do you think going into next week? What do you think about the markets? And again, Discord, Patreon link's going to be down below with that 16% annual discount that's available for a few more days. I've opened up a couple more spots. And as always, happy investing. I'll see you all in the next video.